Okay, so let's begin without wasting time because Zoom will only give us 40 minutes. I haven't upgraded my Zoom, so we have only 40 minutes. And this webinar will be recorded. So it's going to be very short and very precise. And in case of any questions, please do ask in the group. That's the only way I can help. So I cannot give a chance to ask questions in the webinar because we have very limited time in this webinar. So in case of any network problems, if your Wi-Fi, if your network is not so good, do not hesitate to tell me, or you can simply wait, for the recorded webinar to be posted on my YouTube channel. I'll post it tonight, and I think I'll share the link probably tomorrow morning. So there's nothing to worry. So today's webinar, as I told you earlier in the group, it's going to be a free webinar, and I'm going to talk about the dealer's conspiracy theory. And it's going to be very short and precise, but for those who doesn't know the dealer's conspiracy theory, it's going to be mind-opening because you'll view the market in a very different perspective. It's going to be very different, okay? So without wasting time, let's see who are the dealers really. Who are the dealers? As the definition goes right here, a dealer is the one who continuously buys and sells a currency at an openly quoted price in an OTC market. So maybe somebody may ask me, what is an OTC market? An OTC market is simply the Forex market. It is a decentralized market. That's why it's called, somebody says no audio. Am I not heard? Guys, I can see people texting in the group that my voice cannot be heard. Is it true? If you're using your mobile device, on your left corner down, there is a mic. Click it and join via using device audio. Let's not waste time, please. We have very limited time. Can't repeat myself twice. Is everybody getting me? Yeah, people can hear me. I wonder. Okay, let me continue. For those who are not hearing me, you get the recorded version of this webinar later on. Okay. So where did I end? Let me just repeat. A dealer is the one who continuously buys and sells a currency at an openly quoted price in the OTC market. And I was just explaining what is the OTC market. The OTC market is simply a decentralized market, which is not owned by anyone. Simply anyone can get in and participate in transactory acts such as buying and selling, okay? So by doing so, a market maker acts as a counterparty to the most of the trades made by retail traders. So what the dealer does, or what the market maker, because the market maker is simply the dealer, okay? So what the dealer does, he usually trades counter to the retail traders, which means, to keep it simple, whenever a retail trader buys a currency, the market maker sells, okay? And vice versa, which means if a retail trader sells a currency, the dealer buys, okay? And why is that? Because he's there to get the money. He's not there to trade with you guys. He's there to trade against you. Your money is the food for the dealer. You have to understand that. The market is consisted of only three enemies: us, retail traders, the brokers, and the market makers. So we are fighting against these big financial institutions, okay? So we cannot trade against them. The only thing that we have to do is trade with them. So how can we know the way they trade? So I'm going to just stick to the few simple tricks right here. And I hope you all get me. Okay. So in other way, we use the word dealers to address to the big financial institutions that participate in the Forex market. And their purpose mainly is only making money and not otherwise. They are there to make money out of us. They're not there to trade with the retail traders. So to go back in history, just a simple history to clarify things is that the Forex market was not meant for us. The Forex market was only meant for the big financial institutions. But due to the technological advancements and introductions of these platforms, introduction of brokers, we got the opportunity, a very priceless opportunity to participate in the Forex market. Okay, but we were given a chance to participate in the Forex market, but these market makers knew that the market is very volatile. For now, it's per day, there's a liquidity of $5.2 trillion traded a day. That's a huge amount of money. So consists of them and us, we make the $5.2 trillion. So we can grab a few pips out of those $5.2 trillion. Okay, going on, the dealers, as I said, their main objective in the market is only making money and not otherwise, and mostly feed on retail traders. Okay, so they feed in our money, which we are normally addressed by small fish, and the dealers are addressed by the sharks in the ocean. So the ocean is the market, we are the small fish, the dealers are the sharks. So in this class, we are going to learn how the sharks swim and how they trap the retail traders and feed on their money. And you will either be able to decide to swim with them or avoid their booby traps. So at the end of this class, you'll be able to learn how to avoid their traps, or perhaps you can learn how to trade with them, the foot tracks that they leave on the charts, which give us opportunities to trade with them. Okay, so moving forward, in order to beat the dealers or to trade with the dealers, we're supposed to know what our enemies are capable of. So just going to pass through a few points that I'll discuss with you guys, that what are the dealers capable of? What can they do? Okay, so the first point is the dealer is capable of toying with the spread. Mainly, he has, there is what they call the dealer's dashboard. They're given the ability to toy with our spread. So sometimes you can see during the night, you can see the spread, maybe Euro USD, the spread might be, let's say 1 pip, but during the night, you can see the spread exceeds to maybe 16 pips. Okay, because the dealer is toying with the spread and he is capable of toying with the spread. Sorry. The second point is the dealer is capable of seeing who is in major trouble. Okay. The dealer can see who is in margin trouble. Okay. So the third point is they can see they can see whether the majority has kept their stop losses and orders. So the dealer has the ability to see where we keep our stop losses and where we place our orders. Okay. People are complaining in the group that the webinar asks for a password. Well, it's not. Let me help them real quick. No sound. Press left corner. Okay, fine. Thank you for helping me. Moving forward. Okay, I'm just moving forward. They can use their money to create a false structure so as retailers can go against the market. So, okay, no, the previous point is they are capable of recording your order. What does this mean, that they are capable of recording your order? You can, for example, okay, I hope you're getting me. They are capable of recording your order. Now, if the dealer is able to record your order, it means that you can place, let's say, a buy order. The dealer can record that order, which means he will not open that order exactly at the price that you have requested the order to be open. For those who are joining, please switch off the mic. Let's not disturb the others. Okay, let me mute all of you guys. No. Okay, I hope I muted them. So the sixth point, the fifth is that they can use their money to create a false structure so as retailers can go against the market. So what the dealers are capable of also is that they can create a false structure, which means there is what we call, what is this? Circular trades. Circular trades is the moment, or it is a situation where dealers trades against themselves. And when the dealers trade against themselves, it means that they are creating what we call the corrective structures. Now, if they're creating a corrective structure, it means that they are creating a false structure, because structures are mainly formed when the dealer is correcting. Okay. And the sixth point, the dealer, those who are joining, please mute your mics. Okay, sorry, let me mute first these people. To me, mute your mic. Do not unmute yourself, please. Okay, let's move forward. Sorry for the interruption, guys. Okay, on the sixth point, what the dealer are capable of is that they are capable of messing up with your psychology to make sure you make an educated trading decision. So the dealers, these dealers, first and foremost, you have to understand that the dealers, these big financial institutions, hire people who understand different strategies. They hire people who trade the price action. They hire people who trade support and resistance. They hire people who trade what is this? ICT. They hire people who trades Elliott Wave. So they hire different type of traders in their institutions so that they share ideas on what the majority traders are doing. Okay, so we are given these crappy books that are free, maybe Trade Inside the Zone, those bullshits, perhaps, or Zone to Zone with Mark Douglas, because they are trying to make us uniform. They want everybody to trade using the zone. They want everybody to trade structures. But in the real sense, if you follow the rules, or if you follow the rules of the price action and trade with the structures, you will find that it is very difficult to make profit, because you can see a bull flag and price doesn't buy. You can see a bear flag and price doesn't sell. Why? Because they are trying to mess up with your psychology to make sure you make an educated trading decision. Because the moment you see a bull flag, all your mind is clicking, is buying, buying, buying. Okay. Now let's move forward. So what are the purpose of the dealers? What are the dealers' purposes in the market? Because they cannot just be in the markets for free or without any purpose. And doing what they do, they have a purpose. So the dealers, they form zones or levels to traps the traders. Okay, book profits and hit the stops. I don't know whose mic is on, but it's creating some sort of confusion. Make sure you're in an environment with no noise if you're switching on your mic. Guys, please mute your mics. you are creating very okay. Siraj, please mute your mic. Okay, fine. Let's move forward. Please do not, I repeat, this is the house rules. Do not switch on your mic. You're going to create confusion, and the recorded version of this video will be interrupted and people will miss the important key points. So I urge you to switch off your mics. I'm going to go fast because we are running out of time. So the dealer, uh, the second point is the dealer creates panic to retail traders by quick moves or spikes or vectors. So we're going to see all of these things. We're going to see the spikes, no, the vectors, because people are not familiar with the vectors. What are the vectors? What are the railway tracks? What are the half Batman? There are a bunch of stuff that you guys are supposed to know, but I'm just going to pass through them real quick. Okay, because I'm just giving you hints that there is a lot of things that you have to learn. So what are the dealer's purposes? I just said they form zones or levels to trap the traders, book profits, and hit the stops. What do I mean? They create what we call the psychological support and resistance. So I'm telling you guys, do not ever repeat in your lives trade support and resistances. Why am I saying this? Because support and resistances, they're just psychological. They are there to make you think that the market is going in this direction, because the dealer wants you to think like that. Even if he wants you to think like that, 80% of you guys might go against the market and the dealer might book profits and hit the stops. If you're using stop loss, he hits the stops, he moves the market in the same direction that you are anticipating. Okay. So the second point is the dealer. Another purpose of the dealer is that he creates panics to retail traders by quick moves or spikes or vectors. And this is very normal. Sometimes somebody can wake up in the morning in trading the Asian session after the London opening. Maybe quick moves appears, create panic, like what the hell, where is the market moving so fast? So you are going to panic and you're going to make you're going to take hasty trades and make uneducated decisions. Okay. So the third purpose of the dealer is to create fear by hitting the stops. Once the dealer hits your stop losses once or twice or thrice, then man, you're going to fear the market. Okay. Or when the dealer trades counter to the trend aggressively, perhaps you have analyzed the market and you want to buy, but the dealer moves the market opposite with you. Maybe he's going to sell very aggressively with 2 candles of 100 pips, because we are in the moment of very high volatility. 1 candle can be issued with 100 pips. So when the dealer does that, you're going to fear the market and you will not trade, or you will make an educated decision. Okay. So the other purpose of the dealer is to force you into margin trouble. The dealer's purpose is to force you into margin trouble and kill you the end without mercy. What do I mean? This point, what I mean is you can have a 1,000 account. Okay, you are trading heavy, maybe 0.90 or 0.80. Okay, so the dealer is capable of seeing who is in margin trouble. What I mean is he will trade against you and force you into margin trouble, which means that he will book 80% of your margin. Once you're left with the 20%, if you do not close manually your trade, the dealer is going to ban your account. Normally, 80% of the people who are issued with the margin calls, they ban their accounts, because the moment you are sent the margin call alert, your psychology is fucked up. Excuse my French, but your psychology will be messed up and you won't take very good trades. You'll never take precautionary measures to save your account, because what the dealer is messing up with your psychology, making you panic, fear the market, book profits, hit the stops, and he moves away. Okay, so the last purpose of the dealer is to induce traders into taking positions by doing circular trades and wide range swings. So I'll just explain what are the circular trades. Okay, these wide range swings, I'll be explaining them in the for those people who will be with me on the Saturday and the Sunday class. So circular trades, this is the situation where dealers trade against themselves. And normally these circular trades, you can see them during the Asian session, or what we call the consolidation. This is the consolidation box. It doesn't just happen. It doesn't just happen without being planned. People are normally aware that the Asian session is normally the consolidation phase. Yes, it is a consolidation phase, but what does it mean? It means they are trading against themselves, and the moment they're trading against themselves is that they are collecting contracts. The moment the consolidation box is normally the kill zone. That is the kill zone, because the moment they're consolidating, they're trying to induce traders into taking positions. Okay, perhaps the price is buying, isn't it? During the Asian session, the price is consolidating, creating a bear flag. People are thinking the price is going down because it is forming a bear flag with the consolidation phase. But the moment the sellers exceeds the buyers, maybe 80% are sellers, 20% are buyers, trust me, the market will not sell. The market will buy, going against the structure that you see on the charts. Okay, so that is what the dealer does in these circular trades. Let's move forward real quick. The rest of the things will be taught tomorrow. Let me just teach you a simple trick in trading the Asian session, because most of the people trades during the morning. They trade during the morning, the London opening. But you have to understand what the dealer does during the Asian session. If you understand what he does, then you'll be able to either avoid his traps, or trade with him. So during the Asian box or the Asian session, price normally corrects, but not all the time. Not all the time that price will correct during the Asian session. Sometimes the dealer will not do the circular trade and let the market trade the way it's supposed to trade. Okay, somebody just sent me a text. Make sure all mics are turned off. Yeah, please guys, turn off the mics. I'm going to mute everybody again. Mute all. Okay, I think everybody will be muted. Those who haven't muted their mic, please, somebody. Okay, let me keep going. So during the Asian box or the Asian session, normally price corrects, but not all the time. And that means that the dealer is collecting contracts. As I said earlier, during the Asian session, the dealer collects contracts in order to punish some traders, especially breakout traders. So normally in the Asian session, the dealer consolidates or corrects in order to collect contracts to see which side trader or which side are more, either the buyers or the sellers, which side have they gone long, how many have gone short. And normally the ones who have gone long, they must be punished. So we're supposed to understand where you're not supposed to be famous in the markets. Okay, there's a saying that do not be Zac Efron in the market, do not be the famous kid in college, because normally the crowd gets punished. So what I'm teaching you is you're supposed to trade against the crowd. Do not trade what others people see. Trade what the few see. Okay, you're supposed to think like a dealer, not to think like a retail trader. That's the key in booking a lot of profits in a very short period of time. Okay, so during the Asian session, the dealer blows the Asian box either to the high or low, acting as a wrong move to get trapped in the hunting zone. So normally during the Asian session ending, or maybe the beginning of the Frankfurt session or the London session, the dealer normally blows this Asian box either to the upside or to the downside. Okay, so if he blows the box upside or to downside. What are we looking for? Okay, so what are the things to look for at the Asian session? The first thing is the Asian box being blown. You're supposed to look for the half Batman. You're supposed to look for maybe 3 vectors moves, railway tracks. And this is during the end of New York traps. This is just an addition. You're going to see this is not during the morning. This is during the New York session open. So we're just going to see how does the Asian box being blown. Okay, love it. Asian box blown, half Batman, 3 vector moves, railway tracks, end of New York traps. Okay, so we're going to see the half Batman, the 3 vectors, and the railway tracks. Very quick. Okay, so this is an example of the. Let me get a pen. Annotate. Let me get a pen. I think this will do. Black ink is perfect. Okay, so this is the Asian box. This is what we call the Asian box. Let me take a good pen. This is the Asian box. Okay, and the Asian box normally starts from 2 a.m. at night until 8 a.m. during the morning. Okay, all of this a.m. So as I told you earlier, the dealer will consolidate during the Asian session to collect the contracts. Okay, so at this example here, during the London opening, the dealer blew the Asian box to the upside, okay, and created a half Batman. What is a half Batman? A half Batman looks like this. This is the half Batman, which means this is the Asian range, the corrective phase of the Asian range, then followed by quick moves or candles to the upside, creating a half Batman. Now, what the half Batman means is that price consolidate, hit the stop losses, price drops. Okay, so where does our entries be? Our entries can be, if you are very integral enough, you can see price exhaustion right on top of here. So our entries are supposed to be here. We sell very aggressive because the dealer never repeats the same level twice. If the dealer already hits the stop loss once, he never goes back for them because he already punished the early sellers. Okay, people are right, price will sell. Okay, but people are already selling aggressive. They're selling right now here. Okay, so the dealer goes up. If you sell here, you normally put your stop loss at the highest level of the previous day. Normally, a lot of people do that. It might be 50 to 25 pips stop loss. The dealers can see your stop loss. That is the reason why I never use stop loss in my trading, because he can see that. Even if I'll be selling here, I'll hold the loss till here, wait, price comes back, I'll scale in on top of here, sell again. So this will add some profits. Price will come back to my entry point and continue dropping down. So I'll be booking a lot of profits. But what I'm teaching you is whenever the Asian box is being blown, price or the dealer creates a half Batman, entries are supposed to be up here. And how do you know that it's the end? You're supposed to wait for you're supposed to wait for candlestick structures. Okay, I know you already learned this candlestick anatomy, so you'll understand what the bullish engulfing or the bearish engulfing mean, the pin bars, the harami, all these candlesticks patterns that appear in the market. So whenever you see the pattern at the end of the half Batman, put your sell orders, sit back, relax, eat some popcorn and drink some Coca-Cola. Okay, so this is the Asian box. Okay, let me clear all the drawings. So this is how the Asian box is being blown. So the dealer just blew the Asian box from the top, create the half Batman, price drop. So we have 2 opportunities of taking this trade. Okay, the first entry is supposed to be here, and you can scale in when price gives a safety trade. And okay, for those who doesn't know the safety trades, I think I'll be speaking for them tomorrow. They're not supposed to be taught today. Okay, they're very classified information for those who just paid. Half Batman, first entry here. If you miss this entry, the dealer is always The dealer issues mercy sometimes, issues you with a safety trade, so you can even put a sell order here, take some quick 20 to 30 pips, the price ends into consolidation, end of the day. Okay, so that is the first trick of trading the Asian session. Then we move on. Three vectors move. People have been asking me, what are the three vectors? Okay, the three vectors simply are three long candles to the upside or to the downside when the London session opens. So this is the Asian box. As always, this is the Asian box, our Asian range. Price has been consolidating. So the dealer has been collecting contracts in the morning right here, and probably has seen that people are trying to sell. Okay, so if people are trying to sell the market, and the trend says that people are supposed to sell, isn't it? So what the dealer does, will issue quick candles, three long candles, and their range nowadays, they can be even 100 to 150 pips due to the volatility caused by the coronavirus panic, and the market environment is definitely changed. So the three, whenever you see the three vector moves after the Asian session, which means when the London session opens, once you see the three vectors, one first candle, the second candle, third candle, wait for a candlestick pattern. Okay, you'll see a pin bar at the end of these three vector moves. So once you see these three vector moves, god damn it, put a sell order here, very heavy. Okay, I see a message. Who is sending a message? Questions will be asked in the group, not right now. And what time frame? 15 minutes time frame. 15 minutes time frame. What I'm teaching you guys is focus with 15 time frame only. 15 time frame is the chart. I don't use 1 hour, I don't use 4 hours, I don't use daily. I only use those time frames only to swing in the market. But if I'm trying to grab 50 pips, 100 pips a day, 15 minutes chart is the chart, baby. So the three vector moves, 15 minutes chart. Okay, the consolidation, you see the vector moves to the upside, put the sell order, boom, drop 100 pips, you're out of the market. Learn at the end of this webinar, I'll just show you, I'll just give you guys a few tips of how to benefit from these tricks. Okay, so these are the three vector moves. I think I am clear enough. Okay, so sell order here after this candlestick pattern, or you can wait after this candlestick pattern, this pin bar, you can wait for the second candle, which is the bearish engulfing, which engulfed this last bullish candlestick. So you sell right here, drive the market down, perhaps 100 pips. If you use a very sexy lot size, you'll end the day very early in the morning. For those who knew me, since 2015, when I started trading for the Forex market, I used to end my day early at 12 noon. I wake up at 9, wait for the London opening, trade 2 hours, then I'm out. Book $100, $1,000, $2,000, whatever the case that day. I'm ending the day very early because I'm just trading these simple tricks early in the morning. So these are the three vectors. Okay, the railway tracks. What are the railway tracks really? The railway tracks are simply candles with no wicks on the top. If the railway tracks is issued on the top, which means they're not supposed to have wicks. They're supposed to be straight, and they're supposed to be equal on the top and on the bottom. You see? These are the railway tracks. So the railway tracks simply looks like this. Let me draw it. Okay, I think I'm a bad artist. But these are the railway tracks. And simply when you see railway tracks after the Asian range, okay, this is the Asian range. I didn't draw it. But after the after the Asian range, the dealer issues the railway tracks, which means the railway tracks is the pattern that the dealer loves. So whenever he issues the railroad tracks. This is a footprint that he is telling you that we've already done the damage to the upside. So what we're doing is we are not going to show you any visible stop hunt or stop raid that is going to give an opportunity to sell. But because I'm showing you guys right now, when you see the railroad tracks after the Asian session in the morning, drop your sell, drive the market down 100 pips a day, 50 pips a day, you're out. Okay, so I'm just teaching you how to trade the morning, and this is the best time to benefit from the market. Early in the morning, just book your profits early and get away from the market. So this is how the dealer does. So do not trade before the dealer issues the stop hunt, or sometimes he just issues the straightaway trades, to which I will discuss them on Sunday. Okay, so this is the railroad tracks. So explained. Let's move forward. This is I'm just going to discuss the end of New York traps. Somebody just drew on my chart. Please do not do that. Don't do that, please. Clear all drawings. So end of New York traps, what are they, or how do they look? Okay, so simply this was 12 March. Okay, this was the Asian range. Price was consolidating. Okay, so the dealer did not issue any visible stop hunt, no railroad tracks, no vector candles, no half Batman. Why? Because he did a straightaway trade. And what is a straightaway trade? Is simply the situation where the dealer does not issue any visible stop hunt. He just moves the market to that desired direction without letting you see any visible stop hunt. So the straightaway trades, will learn them during the weekend. So you're supposed to know sometimes he doesn't issue those, he just issues the straightaway trades. So the straightaway trades are the best trades, and normally they happen during Tuesday or Wednesday. Okay, so in this situation here, the dealer issued a straightaway trade, price dropped, issued a safety trade. You're supposed to take some short orders right here, drive the market down. During the Asian session, now this is where the dealer traps people. Okay, he issued railroad tracks at the bottom. Look at this, very beautiful railroad tracks. And if you're smart enough, if you didn't trade in the morning, taking shorts, you missed this straightaway trade, you missed a safety trade, he's giving you railroad tracks right here at the bottom during the end of New York traps. So he's issuing railroad tracks to show you that we are driving the market up right now. So if you are holding this trade, your sell order, get out when you see these railroad tracks. Get the shit out of the market. Get out, because the market is going to get back up 50%, 50% to the direction where he moved, and the day into consolidation. So which means tomorrow is a new day, which means he will consolidate, perhaps issue stop and low and rise, which means if you're holding this, you're going to be into a very massive loss. So understand how the dealer moves. Okay, this is the end of New York traps. Moving forward, let's see the 4 trades that you should be looking for. Okay, there are 4 trades that you're supposed to be looking for in the market. Stop and high, information, sell. What do I mean when I say stop and high? Stop and high is simply when the market is consolidating. Okay, the dealer blows the Asian box. Okay, blows the Asian box in the morning, creates an information and drops. Okay, so this is the stop and high, creates, or sometimes issues an information that the price drops, and its vice versa is stop and low, rise. Okay, this can even be in the New York session. Sometimes price corrects in the New York session, it's the stop and low, rise. Okay, so this is the stop hunt. Or in early in the morning during the Asian session, the dealer collects contracts, blows the Asian box to the low, creates the W formation and move. And normally this happens during Mondays. Okay, Mondays, we will see in the weekly structure how he plays dirty during the Mondays. Okay, So there's a straightaway rise and the straightaway drop. Okay, so these are the 4 trades that I always look for. If I don't see them, I don't trade the market. Even during aggressive moves, the dealer will always present opportunities. So you're not supposed to worry that maybe I've lost a certain opportunity during this quick move. All you have to understand is even during aggressive moves, the dealer will still present opportunities. And what type of opportunities are those? The safety trades, the 222 trades, the 333 and the 444. Those are the type of trades that a dealer presents as an opportunity for the traders. Okay, he will not always punish you. Sometimes he will issue opportunities, but you will never see them unless you think like a dealer too. Okay, so these are the 4 types of trades that you should be looking for in the markets. Okay, let's run real quick. So the trap moves are, so we're supposed to learn when does the dealer issue the trap moves. You're supposed to understand that the dealer issues the trap moves the beginning of the week, which is Monday, the beginning of the day, any day of the week, the beginning of a session. We all know the 4 sessions, the Asian session, the Frankfurt session, the London session, the New York session, and the Sydney session. We all know those sessions. The beginning of the session, the end of the session, the end of the day, which means any day, Monday, Tuesday, Wednesday, whatever, Friday, the end of the day, he must issue a trap move. Okay, we have seen during the previous here, this previous picture, how he issued a trap move during the beginning of the New York session. Okay, issued the railway tracks down here, price moving forward to the upside. So these are the 6 moments or the 6 situations where the trap moves are made. The dealer will not issue trap moves outside of these times. So these are the moments that you're supposed to be very careful. The beginning of the week, the beginning of the day, the beginning of the session, the end of the session, the end of the day, and the end of the week. So these are the most important moments you're supposed to be very keen in the market. Okay, so the dealer's cycle. The dealer's cycle simply is the way the dealer moves during the day or during the week. Okay, because he moves in cycles. He doesn't just move rapidly or randomly. He moves basing with the rules. Okay, so he is a cycle that he follows. So if we understand the cycles that the dealer uses, which means we can trade with him or identify most of the trap moves that he makes. Okay, so we're supposed to identify where you are, which means what level you are. Make the count on the levels. You're supposed to count the levels, that which level are you. As I told you earlier, we'll learn the levels during the Saturday and Sunday classes only. I'm just giving you guys these free stuffs today so that we can understand that these things are there in the markets. And if you're not smart enough, you will not see them, and the dealer will crush you like a bug, man. So trade after the stop hunt alongside with the dealer's trend. So do not ever trade against the dealer. These guys are filthy rich, and whatever they put in the market can move a certain amount of pips, but our money is of no use to them. Our money can never move even a single pip, but for them, it's easy peasy. So do not trade. Trade only after the stop hunt alongside with the dealer's trend. So if he issues a stop hunt high, which means he's going to drop, so supposed to drop with him. You don't have to act all confidently and say, I'm gonna buy this market. Okay, I'm fighting against the dealer. That is bullshit, man. We can never fight against them. We're supposed to be with them, trade with them, alongside with them, because we're supposed to learn to fish, or we're supposed to learn to swim with the sharks. We're supposed to swim with the small fish. They're nothing but food in the market. Okay, so the weekly structure. Okay, I'm just gonna go very quick on this. So the dealers trap traders on the first day of the week. and tie up your margin for the remaining days by aggressively moving away from the low of the week or high of the week. What does this mean? It means that during the weekly structure, the dealer will trap traders during Mondays, which means he will create a false move, perhaps to the downside, and people will think that the market is going down. Okay? And when you think that the market is going down, that means you are going to take short orders. And the moment you take short orders, the dealer is going to shift the zone. He's going to trade counter to the from where you guys have put your order. So if you guys sold, the dealer will aggressively move away from the low of the week or the high of the week, which means if he does a stop and low and you didn't see that and you think it's a trend, you sell, he's going to move away from that level. He's going to move away from that low, and he will make sure he trades above that level or below that level 3 to 5 days. He will never repeat that level again. So they will trade above or below the previous peak, possibly using it at the high or low of the current week. Okay, so we're going to see it in an example in the following slides, how the dealer traps traders during this moment. Sorry. And the objective of doing so, the objective of stay away from that particular low of the week or high of the week, the objective is to stay above or below the perceived support or resistance, at least 3, causing exhaustion and panic. And when he moves away from that thing that you call support or resistance, he will never come back till 3 or 5 days to the front. And we're going to see that we're going to see it in the charts. Okay, so this is an example. This is GBP USD. Sorry, this is minute 15 because I wanted to capture all these 5 days: Monday, Tuesday, Wednesday, Thursday, Friday. So these big gray lines are the beginning of the week, and this big gray line right here is the end of the week. So I'm just going to show you real quick how it traps traders. Okay, so this is during the morning. Okay, during the Asian the Asian box or the Asian session, the dealer created a false move to the upside. So breakout traders simply bought. Okay, and if you bought, which means he will trade with you, give you some money. Okay, you think that you are very smart enough. He issues an information, moves away from that level. So this level here, he moves away from it. Remember, you have just bought. Okay, you have bought this, and he issued an information and you are too blind to see it. So tomorrow consolidates, he hit the stops to the upside. He's not coming back from this level right here. Okay, so he's moving away from you. Correct, moves away, and the day is to call it consolidation. Remember, if you bought during the breakout, which means you're already into losses. Okay, so tomorrow, during the consolidation phase, you will think that, okay, if price is consolidating right here, I think it will come back to the upside and maybe I will close with a slight loss. Man, he's not coming back. Remember, he's going to stay away from this level for 3 to 5 days, this level here, 3 to 5 days. So remember, the first day, he stayed away from that level. The second day, he stayed away from that level, okay? Consolidation, he hit the stop to the upside, making you think that, okay, fine, now I'm going to make profits, okay? But he's never coming back right here. And he shifts away from that level very aggressively, sharp, sharp, sharp to the downside. You're already into loss again. And during the New York session, he'll just move slightly to the upside, making you think that he's coming back right here, making you think that you're going to close this trade with a profit. He's never letting you do that. Remember, this is the third day. Staying away from this level or staying away from your desired entry level. So during the fourth day, we're going to issue a safety trade. After the consolidation phase, it doesn't issue any stop hunt. So you'll just be hoping, I'm going to wait until price goes back to my desired entry level, and perhaps I will just break even. And very stupid of you guys, or some people who are not very smart, will even put a stop loss just on top of here at break even. Guys, he's never coming back. Drops, chop, 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 issue the first push, okay, goes back down, issues the second push, third push to the downside, ends the day into consolidation. Now, tell me, how on earth are you getting away from this trade? You're not getting away from this trade with any profit, because his purpose is to stay away from this level for 3 to 5 days. He's staying away from this level. So the moment you see a stop hunt high during the Mondays, now start making the count, okay? Sell, start making the count. One, consolidation is going to issue the third day, stop hunt high, add a sell order, drop with him. If he comes back to the Asian range right here, for those who I'm going to teach them how to trade straight away trades, you add another sell here, you drop down during the Fridays, close your profits, get away. You'll be the one who is smart enough. So for those who bought the breakout, into margin trouble right now. You'll just be crying with babies. Okay, so this was GBP USD, the weekly structure. Now let's see, this was, I was just explaining the downtrend. So let's see an uptrend, okay? Real quick. Remember, I haven't drawn this chart. I have simply screenshotted them just to show you guys these things happens, okay? For those who can see right here, this is simply a live account, okay? GBP USD, 15 minutes. So this is Monday. Remember, these big gray lines are the beginning of the week, the end of the week, which means we have Monday, Tuesday, Wednesday, Thursday, Friday, isn't it? Now, this is the Asian range. As I told you, he's going to issue a false move during the beginning of the week. Now he's going to drop down. People are going to take a sell. He's going to issue a W formation, as here you have seen, okay? People are not smart. They just sold and they're still holding their position, hoping they're going to make profit out of it, okay? The dealer goes away from that level and it's the day into consolidation. So this guy who sold right here is thinking that because I have small loss running, maybe tomorrow I will be able to close at break even. So what does the dealer does? Because he can see your stop loss, he can see that perhaps you're in margin trouble, he's going to consolidate, does it straight away move, straight away trade. Remember, you just sold right here, okay? The price already moved. This is Tuesday, the price moved away from you. Remember, as I told you, he'll never repeat this level until 3 to 5 days are over, okay? So he already moved away from this, your entry level. And on Tuesday, he made a straight away move. He went to the upside. He will come down to give you a little hope that I'm coming down, and you're hoping, okay, fine. Let me squeeze my stop loss. Perhaps it's coming down to hit my my break-even level during the night. So in the morning, he consolidates, doesn't issue a valid stop hunt, does a straight away again, moving away even farther away from this level. Remember, the losses are just increasing. Okay, the losses are increasing, isn't it? Now this was Monday, Tuesday, Wednesday, okay, and this is Friday. No, this is Thursday. Now Thursday, the market consolidates, issues a straight away move to the downside, giving you hope that I'm coming down. And very crazy of some of you, or some people who do not know this, they will sell. Okay, he just sold here, so he's trying to catch a trend reversal. Okay, so he's selling. Remember, he's going to stay away from you for 3 to 5 days. So he's coming down. Remember, he will issue trap moves during the New York session, shift the trend and the days into consolidation. Okay, you just sold, you were given profit, okay, and you're saying, oh, now you're talking, I'm the smart one. You just kept your stop loss right here, very tight. Early in the morning during the Asian session, the dealer just fucks you up with a half Batman hit the stops. So this order here is closed with a loss, and this order here is in massive loss. So whenever you are out, you just drop, and the days into consolidation during the Friday, which means during the next Monday, he will issue another cycle. He'll just start another cycle. So this is his weekly structure. This is how he does. During the Monday, if he hits the stop loss, stop and low, issues a W formation, my man, just buy, grab the market, just make the count. Straight away move, buy. He goes stop and high, comes into consolidation, straight away move, buy, drive the market up here. So put your trailing stop loss right here. It comes back, issues a stop and low during the New York session, add another buy, go to the upside, exit on Friday, book profits in the New York session. My man, you're good as rich. Okay, so this is his weekly structure to the uptrend. So I hope you guys got me. So I'm going to make it easy for you. Okay, so what he does is consolidation during the Monday, stop and low, W formation is going to move away from you, and the day into consolidation. Okay, so Tuesday he might issue a straightaway move, moves away from you, and the day into consolidation right here. Friday he might give you some hopes, come a little bit down, but never repeating this level twice unless a reset happens. Okay, gives you hopes, you add some sales, backs you up. Thursday he stays away from that level, stop and low, rise. Friday the same thing, he stays up, and the day into consolidation. So if you sold right here, you're dead. All this trend is your loss. But if you know this cycle, which means you're going to take buy orders, buy orders, buy orders, buy orders, close them on Friday, happy as a mofo. Okay, so that is his weekly structure. Let's move forward. So lastly, I'm going to just mention some few golden rules to profit from the market. The first thing is stop trading every day. You're not supposed to trade every day. Okay, not every day is the day to trade. Whenever you get a good setup on Monday, milk it. If you don't see a setup on Tuesday, do not trade. Stay away from it. Okay, so the second tip is show up every day. If there is no setup, then do not trade. So just show up in the market, analyze the market, see how the dealer is doing. If there is no setup, there is no entry, you haven't seen anything, don't trade. And there is a great advantage of trading with some people, but because sometimes the trader, the dealer will not issue these safety trades. We will not issue stop hunt, but somebody might see a straightaway move and tell, oh my guy, the dealer is just issuing a straightaway. Let's buy or let's sell. But if you're trading alone, you have seen no setup, don't trade, don't force it. And the third tip is learn to be very highly selective. What I mean is choose your pairs and find setups or find the rules that you're going to trade which will benefit you. Like the way I'm saying, I do not trade if I don't see a stop and low, stop and high. I don't trade if I don't see a straightaway. I don't trade if I don't see a safety trade. But whenever I see a bull flag, that's a trap. I'm not trading it. So you're supposed to be highly selective on the pair. Do not trade every pair. Just choose even 3 pairs. Learn their cycle every single day. Learn how they do. Learn how they stop hunt people. Learn their traps. Learn how he moves with the levels. Okay, and I think you'll benefit from it. So set your hours as follows. Trade the end of Asian session, which means during the London opening, in a range of 4 hours, then take a break. Okay. Trade the red box setups for 2 or 4 hours. What is the red box? That is the that is the New York session. Also learn to capture 50 pips a day. Okay, if it's 50 pips a day, which means per week, you will have 250 pips. 250 pips? Yeah, 250 pips a week, which is very nice. The only difference between somebody who is taking 250 pips with a micro lot size is very different from a person who is trading 250 pips with a standard lot size. So the only thing is your risk appetite and the amount of capital that you have. So if you have a very large amount of capital, you can always capture 50 pips a day, which is 250 pips a week. If you use a standard lot size, you'll get 500 bucks a day. That means in a week it is 205,000 bucks a week, which is very nice. The second tip is, I don't know, the seventh or the sixth is greed kills all good traders. You might be a very good trader, but greed might damn kill you, my friend, because you want to trade everything you see. Okay. Sometimes do not let your smartness oversmart. You might act smart and think that this is a straightaway move because you have already captured 250 pips maybe in 2 days, but you're trying to capture everything you see in the market. I've seen a bear flag. I want to sell this market. You're selling with greed. They're going to kill you, man. So trade only crystal clear setups. Trade only the setups that are very clear to you. Not every setup is supposed to be traded. If the setup is not clear enough, don't trade it. Tomorrow is a good day. There's a saying, do not trade to survive. Do not trade hastily, because tomorrow is a good day to trade also, because tomorrow is a day off. If you're not trading the Mondays, trade in the Tuesday. You don't see a setup in the Tuesday, trade on Wednesday. So we have 5 days in a week. If you trade 2 days perfectly, you're gonna make good money. Okay. And there's the third, I don't know, the sixth or the seventh rule, that all 3 levels do not present every day. Not all levels will present every day. You're going to learn these levels on the Saturday class, I think. So you have to learn to have an average of 100 pips a day in a combination of pairs. Okay, so if you have 3 pairs, just learn to capture not less than 100 pips in a day. So if you have 2 pairs, 50-50, you're done. So I hope you guys have understood some golden rules to profit from the market, and I hope you were with me from the beginning of the class till the end of the class. And I think this marks the end of our today's webinar, the dealer's conspiracy theory. It is a very long topic. I just explained very roughly on the top, so you can. Okay, there's a message. Thank you. Okay, fine. This marks the end. So if anybody has a question regarding today's class, simply just message the group, and so that even others can benefit. Tomorrow's class will be announced. For those who paid, will be announced. Okay, I'll just add you in the group. There's another message. Thank you. Okay, so let's hook up in the group. I'm seeing some messages. Yeah, almost. Okay, let me end this webinar. I have recorded it and I'm going to post it on my YouTube channel and share the link for reference purposes.